The Morgan Report with David Morgan. Discover how to build and protect your wealth at themorganreport.com.
David Morgan with the weekly perspective for the week ending March 2026. Well, it's war, oil, and reality. This is your weekly perspective. It's about money, markets, mining, fear, and war this week. So let's start with oil, because that's the big story right now. Crude pushed above $100 a barrel again, in some cases flirted briefly greater than that price with ongoing conflict between Iran and the Strait of Hormuz closure, where roughly 20% of global oil flows. This is not a minor event. This is a systemic pressure point. Here's what's important. Governments are reacting aggressively. The U.S. is releasing tens of millions of barrels from the Strategic Petroleum Reserve. They're even temporarily easing sanctions on Iranian oil to get supply back into the system. Think about that. The U.S. is effectively funding both sides of the equation just to keep the price from running away. And yet, despite all of that, prices are elevated. Saudi Arabia is warning oil could hit $180 if the conflict drags on. So the takeaways are simple. The supply system is strained, as we know, and policymakers are running out of tools. Gold and silver. Well, let's talk about gold and silver because that's where most of our followers are focused. You might expect the metals to explode in a war environment. Instead, they've been volatile and sharply lower. Gold actually dropped this week substantially, even though escalating geopolitical tensions increased. Silver has been even more erratic, with big swings in both directions. So the question, of course, is why? Because right now, the dollar and interest rates are overpowering the safe haven trade. At least that's what we're told. You can look at the strength in the dollar and you can look at the money flows. And where are the flows? The yields are rising. The dollar is stronger. Inflation fears from oil. And let's face it, big money does move into the dollar under a fear scenario much more than it does into gold, at least at this point in time. But here's the bigger picture. This is exactly what happens in an early phase of a crisis. Liquidity dominates first, but reality asserts itself. And that's because the safe havens really are the precious metals. So the market is not broken. It's going into what I would consider a temporary phase, suppressed by the financial system that's trying to remain intact. The Iran war, what matters? The war, of course, is escalating with no clear off-ramp. Iran has been disrupted, energy infrastructure has been targeted, and the global supply chains are tightening. Markets are reacting to one key fact: there's no resolution in sight. And when markets don't see an endpoint, the price and risk premium increases everywhere. It shows up in the price of oil, it spikes, equities starting to weaken, and volatility increases across the commodity sector. American sentiment is starting to shift and fast. Gas prices are rising again. Inflation expectations are moving higher. And the Fed is already warning that conflict could reignite inflation pressures. That's key. The average person doesn't care that much about geopolitics, and they care about what it costs to live. And right now, costs are going up again, and they see it. This is where it becomes a political, economic, and ultimately systemic risk. So here's the bottom line. Oil is the supply stress point. Gold and silver are signaling financial strain, and the public sentiment is starting to reflect that with the economic pain that they see daily. This is not a normal cycle. It's a transition. The biggest mistake you can make right now is assuming the markets are behaving rationally. They're not. They're telling you something very important. The system is under pressure, and we're only in the early stages of, unfortunately, a long ball game, in my view. Moving to the blog this week, I did have a couple of interviews which are posted up here, of course. And the one I do with Christian, we got into more of the psychology of war than anything else. It's probably worth a listen. You can determine that. And also one later was how to prepare for the economy and the shifts that we're seeing taking place. Gold for the week basically fell off a cliff, as all of you probably know. Started early in the week, 17th, around the $5,000 level up here, just going straight, and then kaboom, ski, a little bounce, and then down again. Down to below 4,500. So quite a move from the high of about 5,500, $1,000 move down. I'm not upset, but I do think this is going to last longer than many of my peer group. Time will tell. And I showed silver last week, but I'll do it again this week. Again, starting on the 17th, silver sitting right about 80, kind of similar to gold, kind of flat. Drop down, bounce, and then down again, getting under 70. Both metals, I believe, are in a consolidation phase and will be in that phase for some time. That's going to wrap it up for this week's Weekly Perspective. This is David Morgan signing out.
The U.S. government debt is about to cross $37 trillion. That's not a typo. That's trillion with a T. Tariffs are being used to try and even the playing fields. Global supply chains are shifting. Inflation isn't going away. And the value of your dollar? It's quietly being drained while no one is really talking about this. The truth is, we're living through the early stages of a financial reset, whether anyone wants to admit it or not. And if you're still relying on mainstream headlines or financial advisors who just tell you to write it out, you could be blindsided when things really shift. That's where the Morgan Report comes in. For over 25 years, David Morgan has been helping investors cut through the noise. He tracks what actually drives markets, from precious metals and mining stocks to global debt and monetary policy, and show you how to protect and grow your wealth when the system is under stress. This isn't just about gold and silver. It's about having a clear-eyed view of where things are headed and making sure you're not caught off guard. The Morgan Report gives you real research, honest analysis, and strategies you can act on, even in a world of rising debt, unstable currencies, and economic uncertainty. Go to themorganreport.com today, download your free report, get informed, get ahead, and take back control of your financial future. Themorganreport.com, because $37 trillion in debt won't fix itself.